Good morning, everyone, and welcome to Reading Candlestick Patterns Part 2. My name is Gail Mercer, and I'm going to be your hostess for this morning. Now, before we get started, I would like everyone to take just a moment to read over the Nadex risk disclaimer. And basically, anytime you are trading, whether you're using binary options, spread, or even the underlying instruments, you do need to be aware that trading is risky. It can involve losses, okay? Now, for those of you that do not know me, my name is Gail Mercer. I'm the founder of TradersHelpDesk.com. I've got more than 15 years of trading experience. I actually started out with a company that programmed indicators and simply fell in love with price bars. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've previously been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, The New Trader's Guide to Trading Nadex Binary Options and Spreads, as well as my latest book, Trading Nadex Binary Options Using Currencies. Any of these books can be purchased either on my website or at Amazon.com. Now today, what I'm going to be showing you is identifying trade information using the candlestick patterns that I went over last week. We will be identifying entry points, identifying exit points, and identifying reversal points. Now, on this chart, you can see we have a lot of dojis. There's a total of about 7 dojis on this chart. What makes a difference between any one of these dojis? Basically, it is all about location. That's the bottom line. Where does the doji occur? Okay. Now, in addition to location, for example, right here, you see that the doji is right at a pivot line. Now, notice that the doji over here is also at a pivot line. So this is where the location is the most important aspects. If the doji were in the middle of nowhere, sort of like this one is over here, then it is not considered a trade entry for me. It's only the dojis that actually occur at a specific point and do exactly what I anticipate. For example, here's another one right at the yellow line. The problem with that doji is it is not the highest bar. The highest bar is the one before it, okay? So a doji should always be the highest or the lowest in the series, okay? The other aspect of using candlesticks is also the pattern that forms with the candlestick pattern. There are certain candlesticks that I will prefer over others, okay? So let's take some look at those. Again, this is the doji that occurs at the yellow line. But because that doji was not the lowest in the series, I would want the 3-bar reversal, okay? And that simply means that this bar closed above the high of the doji, okay? Another great bar is this one because that bar in and of itself is a reversal bar. If you're thinking about buyers and sellers in the market, this particular bar, it opened and then it went down and then it went straight up and closed right at the top of the bar. That told you that buyers stepped in as that bar went down and made the low. Buyers stepped in and gave it a really significant push to the upside, okay? The same thing here. You have a pin bar that opened right up here, okay? Because this is a green candlestick, this is the open. They pushed it all the way down. In other words, sellers came in and they managed to push this all the way down, almost testing this blue pivot line. But what happened at that line? Buyers stepped in and they took it all the way back up to close right at the top. This is very significant because it was sellers in effect trying to take control and they failed, okay? So this is a selling failure bar, if you will, and that's what the pin bar is telling you. Now, again, over here, you see this doji, okay? But this doji is not the lowest, because if you look to the right, you see an immediate bar, okay? I'm sorry, if you look to the left, you see an immediate bar. In this case, it is the third bar, which is this one, that manages to close above the doji that interests me and tells me the next bar will be bullish. Okay. Now, how would you use these formations? Well, it depends on what other indicator you use. And I do suggest using another indicator. Don't just try trading candlesticks on their own. Have another indicator there to develop your trading plan. For example, let's say that we're trading moving averages. This is a 20 and a 50 period moving average, okay? And it's a very common moving average system to trade, okay? Again, where would your entries be? Okay, we have the crossover here. This bar comes back. It tests both the 20 period and the 50 period, even goes lower, and then closes at the top. This could actually be an entry bar. Then you see over here, they have come down, they have tested the 50 period moving average, and then they closed up. Again, this is a reversal bar in and of itself. Then as you move down, you see that same bar right over here pulls back to the 20 period moving averages, closes up, and this could again be another entry point. Each one of these bars gives you a prediction of the next bar being a bullish bar. But remember, we have incorporated this into using with moving averages, okay? Now, do you have to use moving averages? No, there's various indicators that are free in Nadex that you can use. Here's one with Bollinger Bands, okay? And again, you see that the entries are almost identical. You come down, you touch the lower edge of the Bollinger Band here, and this is predictive that the next bar will be bullish. Again, same entry point here, comes down, touches the red line, and gives you a bullish bar on the next bar, exactly as it was anticipated. If your trading plan uses the center line, then you would also have an entry here, okay? So it's just however you formulate your trading plan, but as you can see, either way, the candlesticks would help you determine, okay, these are my entry points using the Bollinger Bands. And that's ideally what it's for. You know, when would you come out of your trade if you were using the Bollinger Bands? Okay, well, again, let's look at using the reversal bars. Let's say that you did enter here and this bar developed and you potentially were in this until 11 o'clock, or maybe you were in until the 11 a.m. expiration, okay, for a daily. When a reversal bar comes, then that's a sign, hey, maybe I should take profits, okay? Does everyone understand that? A trader can never go wrong by taking profits, okay? And if I see a reversal bar forming and I have profits, I'm usually locking my profits in, okay? Now, this is one very simple, similar to the Bollinger Bands, but it's called a Keltner Channel. And the Keltner Channel, again, using pretty much the same rules as what you would have, for example, the Bollinger Bands. Okay, you tested the red line, they rejected it. Okay, so where should it go? It should go up. Okay, now this does not look like a significant move, maybe from 75.60 up to 75.70. But let's say that you did an at the money binary. On the next bar, it just moved 2 strikes in your favor if you're trading, let's say, the Aussie dollar, okay? If you move 2 strikes in your favor, typically that's between a $30 and a $40 move, and that occurs in about 15 minutes, okay? So it's a very quick, okay, the next bar should be bullish. Again, here, you're still within the same range, about 75.60 up to about 75.75. This is a 3-strike move with binary options, okay? That means that move was probably between $35 to $50, okay? Not bad for one 15-minute bar. And again, the leader is the candlestick formation. How would you go short using the Bollinger Band? Well, that depends basically on your trading plan. In this case, let's go back to the Bollinger Band. Let's say that you touch the blue line, okay? What typically happens when a Bollinger Band, when price touches the upper limit, okay, is considered outside of the norm, is going to retrace. Now, in this example, because the market was moving up, you would really need to measure the difference between where your entry was and where the gray line and the red line are, because you may not get sufficient room to obtain profits. That would be your biggest on this one, only because it was an uptrend, okay? If it was in a downtrend, it probably wouldn't be an issue. Now, the way that I do it is I use a multiple ATR formation, and it's very simple. You have to have 2 ATRs in your direction, okay? So for example, on this one, I had 2 ATRs in my direction. I had the blue and the white, okay? That meant that I could actually take an entry. This occurred at 8:45 in the morning. And at the 10 a.m. expiration, it did form a reversal bar, but it actually expired in the money. Again, you have the same formation on the green bar. That occurred at 10:30. You could create your own 30-minute binary option. And this is something a lot of people don't realize. They only trade a 5-minute because they only want to be in the market for 5 minutes. Well, you can take a 2-hour binary like I did here, enter at 10:30 with anticipation of this bar, and then the expiration at 11 a.m. So this is, in essence, pretty much a 30-minute binary option. Okay. Again, over here, you have a reversal bar to the upside. That occurred at 2 p.m. and within 1 hour, it had expired in the money, okay? So it's just looking at a specific indicator, in this case, it's the ATR, and saying, okay, if I get a reversal bar in my direction, I will enter this position. And then if you get a reversal bar that will go against you and you have profits, then you would exit the trade, okay? ATR stands for average true range trading. And your next question, how is it calculated, is actually beyond the scope of this webinar. Yeah, you're scalping a 2-hour binary. That's all you're doing. You're going in, you're taking profits, and you're exiting. And I mean, it begins as a 2-hour binary. But what about when your signal comes, and this is a great example, where you only have an hour and 15 minutes or you have 30 minutes, okay? Does that mean you don't take the trade? Not if you're using a reversal bar that tells you, remember, the reversal bars are leading indicators. So the reversal bar is telling you, hey, the next bar is going to be bullish. You're at a point of support and resistance. So why not take it? Their average true range areas of support and resistance. It's an indicator that I designed that uses average true range. Okay, any questions? No, you would need a ATR that is custom, because ATR by itself is just going to tell you the range of the bar. Now, my website is tradershelpdesk.com, and my email address is gm@tradershelpdesk.com. Can you explain the Bollinger Bands again? Let's see. Well, the Bollinger Bands follow price, and then you have standard deviation, okay? Instead of using average true range, Bollinger Bands uses a standard deviation. So anytime you go beyond the standard deviation, the concept is it will revert back to the mean. And that's exactly what you get on the Bollinger Bands. You know, the blue line is where it's had that standard deviation move. What happens is going to revert back to the mean, okay? And then it's going to go back and it's going to test the blue line again, and then it's going to pop back to either the gray line or the red line. You mentioned 15-minute intervals. Does this work with any interval? Yes, it does. You know, it just depends on what type of binary option that you're trading, okay? Are you trading a daily? If you're trading a daily, you probably don't want to use a 15-minute chart. It's, you know, you need one that's a little bit longer. It depends on your settings. It has an input where you can actually input the standard deviations. Any other questions this morning, guys? What is the closest thing to an ATR on the Nadex chart? Well, I'm not sure. They may actually have ATR in there. Hold on, I'll show you. Let's see. Let's go to Aussie. I have to bring up a chart and actually see what's on it. Let's go to indicators. There's your average true range. And that's what it looks like on a typical chart. And again, you're not going to see plus signs because the average true range is measuring the value, okay, of the price bars from high to low based on X period where you put in the X, whether it's 9 period or a 15 period or a 20 period. But as you can see, it's just telling you the movement. For example, right now, the average true range for the Aussie dollar is 6 pips. It's not in a tradable format until you put that into an indicator, in my opinion, anyway. But again, okay, let's say you don't have average true range, okay? That's okay. I mean, you could pull up a stochastics, okay? Your stochastics is overextended here, correct? I mean, you're below 20, you're overextended. Here's your 3-bar reversal here. Okay, that's at 10 o'clock. Do a 2-hour binary to the long side. Okay, that puts you at 10, 11, 12. So you've got probably, what, 40 minutes left? You need to choose an indicator that makes sense to you. Okay? Stochastics makes sense to me, but let's, it may not make sense to everybody. Choose a channel. Okay? Here's another channel. Is it not showing you the same thing? You have a 3-bar pivot reversal. It's probably going to come up to the upper limit of the channel. There is nothing magical about an indicator other than you understand it. That's what makes it magical. You've studied it, you understand it, you have confidence in it, okay? What makes mine work? I have total confidence in my indicators. I understand them. Any other questions this morning, guys? Gwyneth, I would go back and review the presentation from last week. You would have to visit my site and choose one of the packages in that. They do not overlay with Nadex charts. What time settings do you recommend for EMA or SMA? The standard out there is a 20 and a 50, Kathy. Are there ever any exceptions to the rules for support and resistance lines? Kyle, I'm sorry, I don't follow you. What do you mean, any exceptions? You know, it simply means the market didn't agree with you. You know, this may be a little bit off topic, but from the questions you're asking, how many of you in the room think that the indicators make you money? That, you know, that's the magical ingredient? It's not. Indicators are a tool. That's like saying, I have a hammer, so I can be a construction manager. You wouldn't want me to build your house, that's all I'm going to say. A hammer is just a tool. Indicators are just a tool. It is your discipline. It is your money management skills, okay? That will make you money in this market. It is not indicators. Indicators are a tool to help you trade better, okay? Indicators themselves will never make you money, not by themselves. It is you, your discipline, and your money management skills. Okay, here's a good example. There's a lot of you that will open up a demo account. It's a $25,000 account. What is the first thing that you do? You go in there and you start trading 10, 20, 30, 40 contracts, okay? From a money management point of view, this is not what you should do. From a money management point of view, you need to say, okay, I have $25,000 in my demo account. So how many contracts should I be trading at most? Well, 25,000 times a really conservative approach is 2%. $500 is the maximum you should ever have on risk. Okay? How many of you do that? Instead, you're trading, you know, 5 different markets and you're doing, you know, 10, 20, 30 contracts. And then you go through your demo account and you're down 10 grand in the first week. That is the first problem you need to correct. If you take care of the risk, okay, and that means manage your risk and keep it small. And Nadex really, they help you a lot on that, okay? So you keep your risk small, and then the winners will generally take care of themselves. And Kathy, that's the way it should be, okay? And I would be real conservative if I was a new trader, and I would probably stick to trading one contract on anything until I knew what I was doing. That's right. Trade the products that you understand. Trade the indicators that you understand. Okay? That's what makes successful traders. It's not because they, you know, went out and got some beautiful new indicator. It's really the discipline that they bring to their craft. You know, sit down, take the time, sit down, write out a trading plan. You know, and really write it out. Just don't think in your mind, this is what I'm going to trade. Because research has shown that when we take the time to sit down and write it out, it makes us walk through each and every step, okay? And there'll be things that come up, you know, that you'll think, oh, I hadn't thought about that. I need to put that in my trading plan. And your trading plan shouldn't be very complex. It should be like one page. Why? Because you need to print it out, laminate it, okay? And then you need to refer to it every day. That's what makes a difference. You know, I've told my clients to print it up as a poster and stick it on the wall so that, you know, it's a constant reminder, this is what I'm trading. And only this. Any other questions? I would like to thank you for joining us this morning. I hope you enjoyed it, and I hope you all have a wonderful day.